declining income and he didn't qualify. We were able to pull a rabbit out of a hat. You're about to buy a house.
Yeah, you need to work.
Yeah, so that was wild.
Because you had to take him from conventional back to an FHA loan.
That's right.
If I remember right.
Yeah. And that's how we got it done.
Hey, I'm Betsy Stubblefield, Weichert Realtors Big Dog Group, here again with John Phillips from FirstBank. How are you doing today?
I'm doing fantastic.
Good. So what do we got to talk about today?
We're going to talk about FirstBank, some of the products they offer.
Nice.
And, how to navigate through these higher interest rates.
Good. We definitely need to figure out how to navigate.
Absolutely. We can do that.
Yeah, so tell us a little bit about FirstBank.
Yeah, well, with FirstBank, it's been around since 1906. It's a Tennessee-based bank. We've spread into some other states in our retail and mortgage. It's got a great culture. I've been with the company about 13 years now. And, it all starts with the customer. Mm-hmm. And then everything else follows with that. So it's been a great bank for myself and my customers and family.
And we love partnering with you guys.
We love you guys. You guys are fantastic.
Well, thank you.
Absolutely.
You guys are too, yeah.
Appreciate that.
So let's talk about some products that we got.
Yeah, right now, it's still much of a seller's market. And, unfortunately, when a seller sees a government loan, FHA, USDA, THDA loan. They're really looking for cash, which still make up about 30 to 33% of the offers out there in Middle Tennessee. But conventional is what they're looking for if it's financed. So what I try to focus on is figuring out a way to get this customer into a conventional loan one way or another. Number one, it's best for the customer. Number two, it's going to stand out in a multiple offer situation. And number three, having a local bank here in Fairview, Middle Tennessee helps out, knowing that everything's local, where local decisions are made. So one way we do that, we've got a variety of products. We've got a home-ready product that Fannie Mae has. It's where the borrower can put down 3%. It's a terrific product. Freddie Mac has a Home Possible product. We a lot of times will connect that product with a borrower benefit or a borrower smart product. That's where we can give the customer up to $5,000 to help with down payment and closing cost.
Oh, that's cool.
Yeah, so we can pair a home ready, a borrower smart, and a borrower benefit. So we try to pair them all up, and we benefit the borrower in a lot of ways by doing that.
Yeah.
And a lot of times the sellers really like to use us, because they make sure that the loans close on time. It's amazing. I mean, I think I read a statistic where 1/3 of home loan closings don't close on time. Mm-hmm. And so when you have folks packed up in a moving truck and all ready to go, and it doesn't close on time, that's a really, really bad thing. And I just don't think a lot of the lenders out there understand that.
Right.
So that's another great tool of using a local lender.
Yeah. We definitely try to encourage the local lending because you guys understand the market here versus someone who maybe halfway across the country or more. They don't really understand sometimes our market here. The Middle Tennessee market is so different from a lot of other places in the United States. Even when they're hot markets, our market here is probably going to continue to stay really stable and in a hot market. Even when other areas of the country are slowing down more. That's right. We're still up here.
Yeah, we talked about in a previous podcast about appreciation.
Yeah.
We were thinking at that time 10 or 11%. We could even see higher appreciation levels going forward. We're definitely not going to see depreciation in Middle Tennessee because of demand. Because the demand is very, very strong. We have so many people moving here per day, and we just simply don't have enough homes. So that's why it's very important to get with a local lender, a local real estate company to help you guide you through the process of this.
Yeah, and even with builders, they're building at a rapid rate, but there's just such a high demand here that they really almost can't even keep up with it.
And it just hasn't been a good fun year to build. If you talk, I've got a lot of relationships with a lot of different builders, and it's just not a great time to build right now. Now things will get better. It's a supply chain. You've heard that, I'm sure, a lot in the media with supply chain issues, and I'm sure you've seen this in your own family going to the grocery store. Well, the builders are having the same problem. We go to the grocery store, we don't see groceries. You know, they go to the supply house, there's no supplies. So how are you going to build a house? And everything has to be domino effect and sync. But those supply chain issues eventually will get fixed, and it will be fun to build again. But with that being said, a lot of builders simply, you know, are a little skittish on building, or they're worried about the future economy. Well, they shouldn't be worried about it, because we're going to continue to have people moving here. The supply chain will get fixed. And if you do want to build a home, this is probably the best time to do it. But, you know, I would talk and have some sort of flexibility with the builder on the budget. Are we doing the budget now, or when supplies go down in price, which they will, can we use that budget?
Right. Yeah. That's really good information.
Yeah.
Because a lot of people probably don't know how to navigate with a builder. Because the builders have had kind of, just like the sellers, they've had most of the power for the last year and a half, 2 years. But things are starting to kind of shift back where, you know, buyers have, I mean, we're still a seller's market. They're still in control, but the buyers really are in a better situation right now to buy than they've been probably in the last 2 years even.
No question, no question. I mean, you know, builders, you know, have definitely had the control of the market for quite some time. New construction makes up 10% of the market here in Middle Tennessee. A lot of people don't realize that. They think it's a much higher percent. Existing homes are 90% of the market. So I could see builders giving more deeper discounts. I could see builders not being as strict on using their preferred lenders. You know, when you get to a situation where a builder has a preferred lender, you need to be careful. You need to really make sure you're talking to a lender that's local and that has your best interests at heart. That's not saying that all preferred lenders with builders are bad. There are some really good ones out there, but just you know, make sure you talk to another lender, see what they have to offer. Because I could see builders getting more and more laxed on saying, you know what, you can use the lender that you like the most, the one that's local there in town, and I'll still give you the seller credits that you've asked for. So we see that coming back, and we've already saw that coming back over the summer.
So let's talk about some products.
Yeah. You know, I was talking about that Fannie Mae Home Ready product. It's a great product. You know, I can sometimes get folks approved with a 640 FICO score with that, and they can still go conventional. So it's a great loan for them. It stands out, you know, in a seller's market. They put 3% down. They get a reduced interest rate than you normally would with a conventional loan, and you get a reduced PMI factor, private mortgage insurance. So there's a lot of popularity with that product right now. Freddie Mac, that's Fannie Mae's little brother, Freddie Mac. You know, there's reasons why we use Fannie Mae and there's reasons why we use Freddie Mac, and I'm not going to get into all those details today. But the Freddie Mac has the Borrower Smart product that goes along with it, where you can give up to $2,500 in cash back to a borrower. And then we also have the Borrower Benefit Program that's tied with just FirstBank, where we can give $5,000 in funds to help out against down payment and closing costs. You know, we've seen a little tick up in USDA loans. That's a great loan where you can use out in the Fairview area and further into our western counties. That's a 100% loan. All you need is a 640 FICO score, and you can get in with zero down. You can get the seller to pay some closing costs, and you really get in zero down at that point. There's also a THDA loan. That's for first-time home buyers. That requires a 640 FICO score. We can tie a THDA in with a conventional loan, VA loan, or FHA. It's most popularly done with an FHA loan. It's where a borrower can go in and get, you know, a percentage of the purchase price paid out as a second mortgage for closing cost and down payment, or they can come in and just get the standard, which is $6,000 in closing costs paid. So that's a great product. You got to take a home buyer's course with that one, which pretty much you got to take a home buyer's course with most of the specialty products out there. But they do make the THDA product and the other ones to where you don't have to come in anymore. So that's a lot nicer. Before you had to go somewhere, and you know, everyone's just too busy for that, so you can do it online.
What do you have to do in order to actually apply for a loan?
Well, we make it easy. You know, I'm the kind of person to where when it comes to doing an application, I want to do what the borrower wants to do. So, we have a lot of borrowers that like to come in and sit face to face. That's fine. I've got borrowers that like to just take the information over the phone. We're great with that. And we have a lot of borrowers that like to do online. So it's johnphillipsloans.com. They can go there for our application. I have borrowers that don't even want to talk to me. Some of the younger fans out there.
Yeah.
And you may go through the whole process and you may talk to them once, and that's okay too. So that's where the online application really comes in handy.
Yeah. So there's multiple ways that you can get in touch and get approved.
That's
get
right.
Pre-approved so that you can start that home buying process.
Mm-hmm.
Cool,
Absolutely.
cool.
Yeah, and it's quick and easy too. A lot of folks dread it or just don't want to do it, but we make it simplicity. I think is key.
Yeah.
And then they plug in the information, and then we usually can give out pre-approvals in 24 hours or less. Depending on the situation.
Yeah, that's pretty fast.
Because we're ready to go.
Yeah.
We don't want you to miss out. We don't want to hold up the show, is what we normally say.
Yeah. So what kind of information do you need from somebody?
Normally
to actually
name,
get started?
obviously, and then social, date of birth. I like to look at employment. How long you've been there. Do you have a 2-year work history or do you not? If you don't, it's not the end of the world. But I like to look at that. Are you the W-2 borrower? Are you self-employed? Do you get disability, a pension? Do you have a lot of retirement funds paying out in distributions? What's going on in your life? So we look at all that. We also look at your liabilities. Once we get that information, pull credit, look at your liabilities, and see what your debt to income ratio is. We also, are you looking to put money down? If you're not, it's okay. But if you are, how much? Are you selling a house? Are you getting equity out of that house? We'll look and see if you got to sell that house to buy a new house or not. Of course, in this market, we like to try to not be able to sell the house to buy a new home. We look at the overall picture of the health of the file and try to make that simple and try not to ask too many questions because we know you've got a life and time is of the essence. We make sure those pre-approval letters that we send out are very, very strong. So there's a lot of lenders out there, they'll just send you a letter if you ask for it. But we actually go through the file and pre-underwrite the file right then and there.
Yeah.
So I found out many years ago that I'm as smart as an underwriter. So why not learn what an underwriter knows and underwrite the file up front? So I don't have to go, let me go talk to someone. We know the answers. I know the answers right then and there. And that goes a long ways. So we can look at something and go, yes, I know it'll work, or no, it won't.
Yeah, there's a difference between a pre-approval letter and a pre-qualified
That's right.
letter.
We don't do any pre-qual letters at all. And in fact, I think our letters should be commitment letters, and we do send those out from time to time. Because the loan is underwritten, on site.
Yeah, pre-approval letters are stronger than pre-qualified letters.
That's right.
Yeah.
I would always try to shoot for the pre-approval letter.
You've got some, kind of a flyer for us agents of kind of the do's and the don'ts. What to do, what not to do, how to kind of navigate that whole.
Yeah, it's something that we talk with every borrower up front, and we don't try to scare them, but in some essence we do try to scare them because when you're buying a house, just the world's just you're running by the seat of your pants. The world seems like it's on fire. You're doing this and that, and there's just your company and myself make the stress level go down with just the ease of the process. Right. But you are buying a house. It's a big milestone in your life. So there's a lot of things that can pop up. A lot of expenditures you might want to make for furniture, who knows what, for the home. So that's a don't. So that's something don't do. And please don't do that. So I go over with every borrower and just say, hey, you don't need to take out any new credit cards. Don't start any new bank accounts because we're looking at those bank accounts to make sure that we have the funds for closing, whether it's down payment or closing costs or earnest money. So when you're switching banks, that can make it much more difficult with the paper trail. I have a lot of borrowers that seem like they want to go out and buy a car. Don't go out and buy a car. Please don't. Because what would happen in a lot of cases is, we go out, we have a debt to income and threshold, and you're going to be right under that threshold. For example, if you go out and buy a car, you're going to be
all of
over
a
that.
sudden you go way over. Yeah.
I've had people go back, and I've had them take back their cars. I've had people have go back and take back their furniture.
Yeah.
And it's not a pleasant experience, but they
Yeah.
were able to get the house. And the biggest thing is people quitting their jobs during the loan process. You know, that's the wrong thing to do. We don't need any kind of job changes, retirement, and don't get fired. We had a borrower many years ago that got fired right the day before closing.
Oh.
And it was not it was around Christmas. It was just a terrible experience
Yeah.
for everyone. So, you know,
And they don't end up getting their house.
that person did not get their house. You know,
Yeah.
I pulled out a lot of miracles, but that was one we could not pull out.
Yeah. Yeah.
Luckily, we were able to get them a house in the future, so that worked out well.
Yeah, we actually worked on a deal back at Christmas time, a little before Christmas. Out-of-state buyer coming in.
Oh yeah,
You
yeah,
were working with them,
Yeah.
you know, paycheck to paycheck, kind of.
He didn't want to
pay
work.
stub to pay
He didn't
stub.
want to work full time.
Yeah, and he didn't want to work full time,
Yeah.
and it's like, you know, we had to both have that talk with him about, you know,
Yeah.
you have to go to work.
Right. Yeah.
You
know,
want the house, dude.
So this guy,
Yeah.
he just
Yeah.
started working 34 hours when he should have been working 40.
40 hours, yeah.
And so, you know, we saw declining income, and he didn't qualify. We were able to pull a rabbit out of a hat
Yeah,
somehow
yeah,
and get the loan closed. But we're like, dude,
Yeah.
go to work.
yeah.
You know, you're about to buy a house.
Yeah, you need to work.
Yeah. So that was wild.
Yeah, it was, because you had to take him from conventional back to an FHA loan.
That's right.
If I remember right.
Yeah.
Yeah.
And that's how we got it done.
Yeah.
And I had to do something similar to that recently.
It did delay closing about a week, but you were able to get it done, so we were able
That's right.
to get them in
Yeah.
the house right before Christmas, which I had promised them. I was going to get them into a house before Christmas.
And we did it. Yeah. and we hit, you know, it most lenders would have just automatically denied the loan, but
Yeah.
we held in there, and we were able to switch products, and he did go back and start working a few more hours a
Right.
week,
Yeah.
and
Yeah.
that helped out a lot.
Yeah.
Get it done.
Yeah, that was kind of a hairy one.
Yeah, it was. Yeah, it was.
Yeah.
You know, I try to, you know, like I said, we try not to scare the borrowers too much
Right.
about these things,
Right.
and you know, I realized one day that I do have a lot of people listening to me when sometimes it seems like it's not, when someone goes out and buys a car,
Right.
stops working hours.
Yeah.
I had someone call me from the grocery store, and they're like, hey John, I'm at Kroger. Can I buy groceries? And I'm like, no, you cannot. And I said, yeah, I'm just kidding. Yeah, you can buy groceries.
Yeah.
Go ahead.
Groceries are okay.
Yeah. Groceries
Yeah.
are fine. Nothing else.